So now you're going to study ratio analysis. First, for ratio analysis, where you get the ratios? So from the income statement, that is profit and loss account. So sales. Then from sales you want to get profit, gross profit. How you get the gross profit? Cost of goods sold you say, now you get gross profit. And gross profit is named in gross profit, gross income, gross margin. Then first you can operation expenses and admin, selling expenses, distribution. When you subtract it, you get the earning before income tax, profit before income tax, operation profit, operating income, operating margin. These are the items you will get. Then after you should subtract the interest. Then after profit before tax and profit before tax or earning before tax or taxable income. This is what you get. From that, when you remove the tax, you get earning after tax, profit after tax, net profit, net income, net margin. These are the terms which indicate this. Then after, if the company declares dividend will be removed. Then after, you get earnings available to equity shareholders, that is EAT, ESH, earnings available to equity shareholders, that will be there. Then dividend on equity shares. First, preference shares. Preference shares is like shareholders, but they don't have any voting rights. They're just shareholders, such a way will be there. But actual shareholders are equity shareholders, so they will have the actual dividend. Then after, if the dividend is being declared now, okay. If not declared now, the retained earning or undistributed profit will be shared back to where net worth. It will go on to the P&L account, it will go to balance sheet. So this is what the income statement. From this only you can understand all the ratios. Okay.